So welcome to the first webinar of 2025 from Adaptive US for the US region. We did have one for APAC region as well, the very similar webinar, because what we felt is we have not been doing justice to one part of the world, which is a large part. You have Asia, Africa, Australia. Then we decided from this year, we will repeat the webinar for the APAC region as well. So in a sense, it also makes me ready for the webinar better because I already have done this similar webinar very, very recently. Many of you may know me, some of you are my past students, but many who do not know me, my name is LN Mishra. I'm called LN, and I have been part of Adaptive for about 8 years now. I've been teaching courses on business analysis for almost 15 years now. And I am a practicing business analyst for close to 27 years. That's a pretty long time. And I also happen to be the first business analyst in the world to complete all 7 IIBA certifications. At the same time, I also have mentored more than 2,000 business analysts to become IIBA certified, which I would consider, to my knowledge, again, another world record. So I spend almost 30% of my time conducting business analysis activities for Adaptive itself. We are a small training organization. Doesn't mean that we don't need business analysis. We do pretty good amount of business analysis at work. We have a small development team as well within our company itself. Then about 30% time I spend in writing on business analysis. I have written close to 25 books. So recently I'm working on a book which is on the behavioral skills for business analysts, because that's something I find not being touched upon very well. So you will see some update from us about that book. Then I also created a course on generative AI about a month back. So that course is going to be released in February. So that's what I spend time on. So teach, conduct, and also write. That's where my time goes. So thank you for joining me today. It's always a pleasure to meet fellow business analysts around the world. And sometimes I tell wherever I go in the world, probably in 50 plus countries, I will find one of our students. So that's a pride factor for any teacher to see so many students in so many places in the world. Okay, then I always tell people that people who take time out to learn, they are definitely going to do very well in their personal life and professional life. Because the moment you stop learning, you are dying. That's as simple as that. So keeping that learning journey ongoing process is very helpful. I personally try to do one certification a year. Like I last year I did a PM generative AI program from PMI, and over the years I've done I think 17 or 18 certifications to make sure that I'm learning something new every year, and I use certification as a mechanism to get it done. No, so if you have a certification goal, you'll typically learn something about it. Otherwise, you cannot get certified. So I'm thankful for all of you for joining us today. And let's see and let's learn together this particular technique, which is called financial analysis technique. So obviously the agenda is very simple. We will talk only one technique, which is financial analysis, and I will try to dispel all your fears and apprehensions about this technique. It's not so complex. It's not rocket science. As long as you understand the foundations, it's a pretty easy technique to apply. At least in the simple situations. In the complex situations, things can become very complex. Then we will also try to do a mock question so that we can apply the learnings that we are having here to that particular case. Then I will also spend about 5 to 10 minutes talking about adaptive at the very end. Most of you probably know us, so you don't need that intro. But those of you who have never encountered us in social media or on Google search, I will speak few words about adaptive US. And then I would like to take as many questions as I can throughout the program and later part of the program as well. If I'm not able to answer any question today, I will keep a note and I will definitely come back to you through email. And this is something interesting for all of you. Those of you who stay towards the end of the webinar, you will find an information about how you can get $199 discount on one of our newest offerings, which I believe will be very valuable to all of you because you are from the BA community, and it is definitely worth learning that particular subject. So the question comes, what is finance and what is financial analysis? So finance is typically related to money. So that's what is the basic definition of finance. It deals with money that the company is earning or spending. So the money to a company can come from sales, which is like selling something to the customers, or it could also come from investors or through loan. There are many ways companies can raise capital or money, and there are of course many ways companies spend money as well. No, they spend money on employee staff cost, the facilities cost, building new products, marketing. There are so many things that the companies are spending money on. And obviously, every time we spend money, we have to be cognizant of the fact that wrong decisions can result in a loss to the company. And especially if you're putting in a lot of money into a project, it could result in a disaster for the company. So we have to be very careful that the money that we are spending is really worth spending. That's what we try to do in financial analysis. So as I said before as well, finance is the language of business, and you cannot avoid finance. So please get it out of your mind that I can bypass finance. I don't have to understand these terms. That is not going to work, especially as you become a senior business analyst. As a junior business analyst, probably you are not exposed to finance, and somebody else in your team or unit is taking care of that. But as you become a senior business analyst, you want to influence senior management on any decision making process, you have to show money. No, if you don't show benefits through monetary terms, senior management is not going to accept it. No? Because end of the day, businesses exist to make profit, and that profit comes from earning higher revenue and lowering operating costs. That's as simple as that. So if you can earn more through some mechanism, make your business grow to other countries, uh, territories. So if I remember some time back, like say 20, 25 years back, if you wanted to do business in a foreign country, it was so hard because you have to have physical presence, you have to have people on road, but those days are gone. Today, companies sitting in Chile, Peru, Azerbaijan, Baku, wherever you are in the world, the internet connects you to a large part of the world. So there are many products and services which can be created in one place and delivered in other places. So that also opens up plethora of opportunities to organizations which were very geography focused earlier. They just did something in US or in UK or in Canada. They can now actually go to Australia, they can go to Germany, they can go anywhere they wish to because the needs are more or less there. Everywhere you see people buy cars, they buy clothing, they buy software. So there is no place on earth where people are not buying things. So, and this is where the role of software systems comes into place because software is all pervasive. It's not limited to a particular geography, not limited to a particular sector. In fact, I was speaking with a good friend of mine, and she was trying to build a system for the local church. So I asked her, why are you building a system or a software for a church? Then she said, yeah, the church wants to understand who are the members of the church. Are they visiting the church in time or not? Have some of them drifted away from the church? So they want to have that data available to the church for further action. So you see, religious institutions also, which happen to be very old in terms of time frame, if you see some of these religious institutions date back thousands of plus years. You know, and they are still looking at using software to manage their business. Okay, so we will start with few terms, and I would explain each of this term carefully, slowly, so that you understand. And if you have any question, Please put it in the Q&A panel because I can see the Q&A panel um, and then see it. Oh, okay. Georgia says even non-financial organizations require financial analysis. No, it is true. Even your family, if you look at your family, do you don't need financial analysis or you don't need? You need. No, you have an income which is coming through your salary. You have so many expenses that you incur on food, housing, clothing, travel, entertainment, education. You have to keep some money for emergencies as well. So, in fact, the person who is running a household is already kind of a default finance manager. Okay, so they're very careful. And I, in fact, remember even my mother, she used to track a diary in a small paper diary, and she used to write any expense done in the family. So this is what I purchased today. This is what I purchased today. So that she can look back at the expenses and figure out which expenses are genuine, really needed, which expenses can be avoided. And in those days, people had much less money in hand. So I think that probably could be the reason that they were very particular about expenses. Nowadays, I don't see people being so careful about spending because probably people have higher disposable income. But at the same time, let's also keep in mind that sometimes income sources can stop abruptly for whatever reason. For individuals, for businesses as well. Like, I don't know how many of you have heard this company. There is a tutoring company which has lost almost, I think, around 95% of its value once ChatGPT has come in. Because what students are doing now, earlier they used to go and take help of that company to get homework done. Now they're able to do it using ChatGPT. So people are not going and paying money to that particular company. So they have to figure out another way to kind of sustain themselves, which is something we are also looking at because we also understand very well that um, generative AI and AI will affect us for sure. And how do we add more value to our students compared to only just giving content? Because content now will be available in abundance, practically at zero cost. Okay. So we have to figure out ways to help our students more than what we have been doing so far. So some thoughts are in mind. Okay. So first thing is cost benefit analysis. As you can see here, it's very simple. We look at all the costs that we are going to incur in a project and all the benefits that we are going to get from the project. And then we create a table form, which I will show you, where we kind of write down different kind of benefits that you can think of. It's not a complete list, there could be more as well. And the different kind of costs that you could think of. And what I did, I used BABOK as a reference because BABOK has been around for quite some time. Most people, many business analysts in the world understand BABOK a little bit. So I said, okay, let me use BABOK as a reference source. Then there are terms like return on investment, mostly called ROI in a short form. Then there is something called internal rate of return, IRR. Then there is something called payback period. There is something called present value, and there is something called net present value. So I'll explain all these terms slowly for you. Okay, so we start with the first table, which is called the cost benefit analysis. And those of you who uh, who are a member of IIBA and who might have taken a look at BABOK, you will find this image in BABOK. Sometime I wish instead of putting this XXXX, we could have put some numbers. That would have made more sense to people. No, because these numbers are not identical. So please don't think that the revenue in year one is same as the revenue in year two or same as the revenue in year three. This can be different numbers. But usually financial analysis is done at a very early stage of a project or investment. So mostly we don't have actual numbers. When you're starting a new product or a new project, you don't really know how much money it will make. You just make a guess saying that, okay, this is what I'm expecting that it might happen. In some cases, it may be easier, like say, for example, time savings. That can be pretty much easily computed because you have a baseline time being spent at this time in the current state. And in the new state, you can definitely figure out that because of certain automation, this process is going to take much less time. So that way you can very clearly see how much time I'm going to save in the particular process. So I'll show you an example which we tried at Adaptive itself, and that has helped us quite a bit of saving a lot of time on the team front. So obviously, any new product that you want to build or improvements that you want to make to an existing product, you would expect certain revenue stream to come through. Otherwise, there is no point in building a new product or a new service. So maybe in the beginning it's a bit slow, then it may pick up. No, it doesn't happen that you create a product and it becomes a blockbuster in first year. If it happens, you are very lucky and you should thank your stars. But it's unlikely. So maybe first year you sell few units, in the next year you sell few more units, in the third year you sell more units. Like if I look at Adaptive itself, in the first year we probably got about 50 people certified, then it became 75, then it became 100, then it became 150. So last year we reached more than 300 students being certified. So, and there is obviously a proportion of students to certification. So the more people get certified, we get more students and more revenue. That's how the whole thing works. So obviously, revenue is something you have to estimate. Finding out, are you able to sell more items or more units, and what kind of revenue you will generate by this new initiative. Then obviously, a lot of times we also implement software systems to reduce operating costs. Softwares are pretty powerful. I would say they can do things which used to take a lot of time, can take a lot less time. So maybe time savings and operating cost are very close to each other. For us, if I take a look at Adaptive itself, I used to spend about a day in a week to write new blogs. That was my agenda or my action item, saying that every week I have to write 2 to 3 blogs to publish on our website. And that used to take about a day's time because you have to think and you have to create content. And then, of course, you have to polish it, put images and all. Now, with AI, I'm able to do the same thing in about an hour's time. So from 8 hours of effort that I used to spend, now the effort has come down to 1 hour. So now I don't have to write the entire blog. I just have to give some bullet points saying, I want a blog on this topic. These are the headings that I'm looking at. So please write a blog for me. So there are so many tools which can do that. And then I look at the blog and I figure out if this is talking sense, because sometimes AI can talk nonsense. So you have to be very careful that you are not publishing something which is nonsense. So that kind of a quality check you do, and then you are ready to publish. Then you can also reduce cost of errors. And let me tell you something interesting that happened to Adaptive itself. I'm taking a lot of example from Adaptive because I'm part of Adaptive, so it's a lot easier for me to relate. So we submit proposals to customers saying this is a project that we would like to pick up. One training project. Okay. So the internal computation that we had for ourselves, uh, we thought we will charge the customer this much money for a 4-day course with the content and success guarantee and everything put together. But when we created the proposal in Microsoft Word document, the number somehow became like this. Okay, so observe these two numbers. They're so close to each other, same set of digits. The first digit is same, the last two digits are same, only the second and third digit got interchanged. The customer was smart, they picked up the proposal and they gave us 3 orders for the same price. Okay, but imagine we were actually losing USD approximately, I'm saying 3,800 on per program. This is what we should have really got. We got much less. So our margins got squeezed drastically because this was the margin that we were trying to make. Okay. But once you commit a number to a customer, you can't go back. You can't say that I made an human error and hence I am going to charge you more. That's something nobody will accept. So we had to bear that cost at our end, but then we realized that this is a very dangerous thing to happen when you create things, especially numbers. using Excel or any other tool, you are likely to make mistakes. So we actually worked on creating a quotation app so that the quotation app will produce the quotation and the chance of these human errors will come down. Then obviously, because of a change in a product or a service, you may get better customer satisfaction, which is again a benefit. Then you also could encourage or you will reduce your cost of compliance because you have done right checks and balances in your system. Other means the system doesn't know, and you can think what other benefits can come because of your project. So some of these are very tangible, very financial number savvy, but some of them may not be. Like I think increased customer satisfaction, putting it into a dollar value would be hard. From my side, what I think, I know my customers are happier, but can I put a dollar value to it? It's very hard. Okay, unless there is some mathematical formula somebody is working on, which can produce a number for us. On the cost side, we of course have a project cost, which could be a development cost or a procurement cost. There could be ongoing support cost. Any application you build, you need to maintain that application. You probably need some hardware, software, licenses to be available to you. Like we take licenses of Microsoft Windows, SQL Server to host our application. So we have many applications that we put, and that's what we do. So on some of these applications, we expect more of a lead generation mechanism. So we can say, okay, every lead that we gather from that system is worth $20. Because that's what we have seen over a period of time, that we spend about $20,000 a month to generate about 100 leads for the company. So on average, a lead costs us $20. So whatever number of leads we get through that application, automatically it becomes the value of that particular application. You could also have some infrastructure renewal required, and there could be some other costs as well. So when you add all these costs, you get total cost. And obviously, as I said, I would have preferred numbers instead of having just X letter. And then you get something called net benefit, which is a very simple calculation again, which is total benefits minus total costs. Usually, financial analysis is done on yearly basis because most businesses plan things on a yearly basis. But it's not hard and fast. You could have shorter duration plans as well. And then this is interesting for you to observe. There is something called cumulative net benefits. So in cumulative net benefits, what happens is the first year you typically would make losses, natural, because you are investing into the product or project. In second year, you start making some benefit out of that project. So the investments also have been made before. So you start making some loss, but not so much loss like first year. So you add the benefits here, and then you probably would come up with a number like this. So this has become positive. So maybe I can add a set of numbers here as well, just for our calculation purpose. So maybe this was my first year loss, but second year I made 200K positive contribution. Third year again I made 200K positive contribution. And fourth year again I made 200K positive contribution. So that means this is the amount of money that is left with me after uh, kind of spending all the money on maintenance and everything else. So now you can see here, this was 500K. Because I made 200K here, so this got reduced to minus 300K. So it's essentially the last year's closing balance added with the current year's income or revenue or benefit. That's what I got added here. And next year, it again got reduced further. It became minus 100K. And in the fourth year, or as per this is the third year, because I'm treating this as year zero. Some people treat it as year zero, year one, whatever you want to do. Year zero is the year in which you invest into the product or project. So now it became positive here. So this is what we call it as payback period. That means in the third year, I'm going to turn positive overall. So whatever my investments have been made, I have covered all that investment and I'm kind of turning into profit zone. So that's what we call it as payback period. And typically, a payback period of 2 to 3 years is considered as a good payback period. That means you are recovering your costs reasonably early. If something is taking 20 years for you to recover, then that is something you have to be careful. Uh, And always remember, most likely people are optimistic about revenue and pessimistic about cost, which means we tend to over project revenue and under report cost. So keep that in mind. And please make sure that you are not overestimating your revenues or underrepresenting your costs. So many projects I've seen personally at Adaptive as well, we would have anticipated that this product will have that much demand, but the real demand could be just one third of what we estimated, whereas the costs could be going up compared to what we estimated. So keep that in mind and probably do a three scenario analysis. I would suggest that for you. It's called scenario analysis. And in cost benefit analysis, you carry out this analysis as well, where you take a very positive scenario, which is probably this one, an expected scenario, and a pessimistic scenario. So, in the pessimistic scenario, you take things like revenue is not going to be as much as I expect, costs are going to be higher than what I expect. And in that scenario, how much money am I losing? So if the loss is very high in the pessimistic scenario, maybe you kind of step back and see if this is something I should be going ahead. Okay, one of you have asked a question. Let me see here. Uh, yeah, Tatiana has a good question. Can I compute reputation value? I would recommend not to, because these are very subjective and it's very hard to really kind of put a number how much your reputation has gone up, what is the value of that reputation. It's very hard. You can always have those factors discussed, mm, but not necessarily kind of put a number around it. It's very hard to do that. Well, unless you have some expert in your team who knows how to value reputation. Of course, there are people and companies who do that, but it's a very expensive affair to do. Osama has a question saying, do I include taxes in costs? No, taxes are beyond profit. So this is your profit. On your profit, you pay taxes, and taxes go to government. So it's not a cost to you. But sometimes when you are deciding on an initiative, you know that when I spend money, my profit goes down and my taxes go down. So even if I'm spending $6,000 on some event, I'm just taking an example, $2,000 get offset by taxes. So even if I don't spend anything, I have to pay $2,000 to government, on that money. So in real terms, I am impacted only by $4,000, and I can see whether that hit is something I can take or not. Taxes play a very important role. Please remember that. Even in your personal finance, if you take a look, there could be assets which are taxed more, there are assets which are taxed less. So always consider taxes as part of your computation for return purpose. Like how much return am I making after taxes? Because that's what stays with you. So if you want to include taxes here and see post-tax impact, not bad. You can actually add another thing called taxes. This is my impact on taxes, and finally, what is left in the company. So taxes could dampen your profit and kind of cushion your losses. Okay. Then again, as I was talking, I was also uh, huh, what is Sri Vignesh saying? I am not very okay. I'm not getting the question, so I'm skipping that question. Could optimistic, pessimistic revenue be a type of, yeah, it is actually a type of PERT estimation for sure. Okay. Regarding taxes, it pays to spend time to understand the client's methodology. Yeah, of course. It's always go and check with your finance team how they compute taxes, how they apportion costs. I will come to that as well, which is a very, very important thing to understand. Again, as we said, benefits can be tangible, intangible, costs can be tangible and intangible as well. So intangibles are a consideration, but should not become a major consideration. Okay. Then few terms I wanted to discuss with you folks, which is not there BABOK as explicitly as I would like it to be, but it's important for a BA to understand these terms. One we call variable cost. Like say for example, if I am trying to uh, manufacture a new pen, like say for example, this is a pen that I want to manufacture in many units. And every time I manufacture one additional unit of this pen, I am spending on the material, on the manufacturing process, energy, people cost, everything goes into this. So this is what we call it as variable cost. That means the cost increases proportionately to the number of units that you produce. At the same time, a pen manufacturer will have a factory, will have an office, will have an HR department. So many things will be running in a pen manufacturer setup. And those costs are not going to change that much if you produce 5 units or 10 units or 50 units. So that's what we call it as fixed cost of operations. So many businesses have very high cost of high fixed cost. Like for us at Adaptive, we have a pretty high fixed cost business. For us, the variable cost isn't so high, but for a car manufacturer, the variable cost is also very high because they have to produce all these items to assemble a car. Then we have a term called gross margin, which is essentially your net revenue, like your revenue minus your returns. That's what we call it as net revenue, minus variable cost that you have incurred. So this is the money that you're saving for the company by producing one more unit. And then what happens is because these fixed costs are there, so we need to understand net what is that we are earning. Because suppose I plan to produce 10,000 pens in a month, and I'm spending $20,000 every month on my setup cost, just a random number, I don't know. So I will apportion $2 to each pen manufactured. So that will bring down my net margin by $2. Usually, a business will not go for anything which has a negative gross margin. That means you're spending more and earning less in the variable cost. The net margin can be negative, at least for short term, but it should not be negative in a long term. Okay. So please make sure that your margins are healthy as you move forward. So this is what I have tried to do it. And if you see this jump on fixed cost, what it is indicating is once you reach a particular volume of production or output, you may have to add new factory, new set of people doing things. So suddenly your fixed cost will jump up. That is what it is trying to indicate, that after this, your fixed cost will jump up like this. And again, at some volume, again, it may triple because you cannot produce as much in the existing capacity. Actually, management accounting is a very interesting topic. I wish almost every business analyst should spend a little time in understanding management accounting, tax accounting as well. You may not become an expert. I'm not expecting you to become an expert, but understanding those concepts are very, very helpful because at the end of the day, taxation, allocation, all these things affect your decisions. Okay, then I'm going to show you few terms. I can use these terms to create some formulas, which is not very hard. So what I have done is any solution that you want to build, there is a cost of procuring it or developing it. Well, like the quotation app that I talked to you is something that we developed in-house. But obviously we are paying employee developer cost, infrastructure cost. So nothing gets built at zero cost. So we spend some money in building it. Then, in case you are migrating from one system to another, sometimes people do, like they migrate from one website system to another. Like, say, for example, uh, long back, not very long back, maybe 7, 6 years back, we had our website built on a technology called WordPress. Okay, some of you might know this technology. WordPress is a very popular website building app. But what happened is it got hacked. So these hackers got into our website. They defaced our website. They put some ugly content on the website. So it became a very embarrassing situation for us to kind of come out of that situation. Then we realized that this platform is good, it's inexpensive, but not so secure. So then we looked around and we figured out that there is a platform called HubSpot, which is a bit more expensive, reasonably more expensive, I would say, but it is very secure. Okay, because it's controlled by the company called HubSpot. So they make sure that your website is not being attacked or harmed by these malicious people. So we had to migrate all the content that we had created in WordPress to this new HubSpot site. So that would have required again some cost for us. And fortunately, HubSpot is not a very difficult system to use. So the learning cost wasn't very high. But in some cases, there could be a training or learning cost as well. So when you combine those two costs, we will call it as investment or cost of making the change happen. So this is something that is happening before you kind of go live with the new system. But as you go live with the system, after that, you still continue to maintain the system. Like we are paying HubSpot annual fees to use their platform. So that goes into something called cost of usage. And if you see here, I have taken a 5-year time horizon, not a 50-year time horizon. The reason is most IT systems may be changed after a few years. No, you can think like whatever application you have, do you think 30 years down the road, you will still be using that application? Very unlikely. Very, very unlikely. Most likely, unless it's so closely aligned to your business and you have put a lot of business rules, maybe then you can think of using it for 10, 15 years. But often we would look at a better platform over a period of time because a lot of new capabilities are coming in terms of new platforms. So maybe in future there is a CRM system which is much better than what we are using today. So that's why I have kind of taken the time frame as 5 years, not a very long time frame. Okay, Bina, we will share this presentation. Don't worry. You don't have to make a note of this. I'll share it with all those who are here today. So when you combine the investment with your cost of usage, you get something called a total cost of ownership, which many often you will hear people talking TCO. In fact, in business, a lot of times learning the vocabulary makes you 25% competent. Think in that way. If you understand these terms reasonably well, when people are conversing, you can understand them. But if you don't understand the terms, then it becomes a hindrance to your learning process or understanding process. So please remember these acronyms as well as we speak. Then obviously the net benefit is total benefit minus total cost. This is a very simple formula. We saw it before as well. And then we have a definition called, or a formula called return on investment. So this is basically net benefits into 100 divided by the cost of investment. So this is what you call it as ROI percentage. The higher the ROI percentage, the better the investment. The lower the ROI percentage, worse the investment. Okay. Then again, as I said before, the payback period is the time taken to recover the cost of change that you incurred in the beginning. And I showed you the example minus 500, minus 300, minus 100, plus 100. Okay, then I will refer to one particular page in BABOK, and this page has troubled me like anything. It's troubling me for almost 10 years now. Okay, so I wish this paragraph gets a little bit clarified. And a lot of our students come back and tell us that they seem to be having two formulas for ROI within BABOK, which is a bit strange. It should not be the case. And the sad part is what is written like a formula, which people will trust more. No, compared to the text, you will obviously trust a formula. No, we are all tuned to thinking that mathematics is more accurate. So there is a formula like this, which is actually incorrect. Okay. And the formula mentioned in the text is actually correct. Okay. So some of you, if you are planning to take CBAP or CCBA exam, and if you encounter any question on this, please make sure that you use this formula, not this formula. So we actually tested this with one of my colleagues. When she wrote CBAP, she said, okay, I saw this question and I remember I applied both the formulas and the text formula happened to be the correct formula. And because this formula actually inflates your ROI quite a bit, because you don't have usage cost appearing here, which could be significant. In some cases, especially if you are going in for a SaaS product like software as a service, the major cost is actually usage cost, not initial investment. Okay, good. Then we come to another interesting concept, which I think many of you would recognize. The value of money reduces over a period of time. It's almost universally true. The house that you could buy for $50,000, maybe now it's $150,000 or $250,000, the same house. So, so if we are receiving benefits in the future, we need to bring it to the current day valuation, because everything we want to compute on as of today. When I invest, I look at the future cash flow, but I want to bring it to the current value. And how do we bring that? There is an interesting formula, which is again there in BABOK itself. Um, so if you can see here, present value is equal to net benefit in a particular time frame, third year, second year, fourth year, divided by 1 plus discount rate for that period. And in fact, the discount rate keeps increasing as you move forward. Okay. So, for example, I think I can show you in Excel. Let me know if you are able to see the Excel file. Are you guys able to see the Excel file? I would trust so. Let me see. One second. Oh, you're not able to see. Okay, that means I have to stop this from here and I have to go here. Yeah, I think now you should be able to see. Okay, so I assume a discount rate of 10%, a very simple number so that it's easy to compute. And typically this is connected to your inflation, connected to your risk profile of the project, those kind of things. Okay. So I take a discount rate of 10%. So if it is year one, so this is year one, this is year two, this is year three, year four, year five. And I will stick to the BABOK convention of investment being made in the 0th year. So I take this, and if you see here, for the first year, it is 1. So no problem as such, uh, because there is no discounting applied to the current year. Then in the second year, it becomes 1 plus 10%. Okay. So it's 110%. So if you convert this into a number, format cells, number, I'll just take 2 decimals, it will become 1.1. In the second year, it will become this number into again 1.1. So this becomes 1.21. And as you pull along, you can see here, by the time we come to the fifth year, it has become 1.61. Okay, so it means the future value of money becomes very, very less. So you have to be very careful that somebody promising you, I will give you this much, this is it. So I was actually listening to one very funny financial analyst's calculation, and that calculation said that you are going to get this much money in 135 years. So I was thinking, who is going to live till 135 years? I'm already 55. So that means if I live up to 135 years more, I will be 180 years of age, which I think it's impossible. So whatever money I have to make or use, I probably in my lifetime, it may be 85, 90, 95. Maybe sometimes people live up to 100, 105 as well. But going beyond 105 is kind of atrocious. But that financial analyst was telling that you will get this much money if you keep the money for 135 years. Okay, back to our topic. So this is how you basically compute the discount rate. So you can use this calculation very easily by basically following simple Excel. And in fact, Excel is an amazing tool to do financial analysis because you can put the numbers, you have the columns, and you have the rows. So pretty nicely it can be done. Okay. Uh, so let me quickly show you one caselet that we have created for one of our earlier processes. Okay. So what used to happen is something like this. I will tell you. In the past, one second, I will not go here. I'll just add a couple of slides here to kind of explain the case. Um, so, say 6 years back, we did not have right automation to intimate students about a new session coming up. So some of you are students, you would have seen so many sessions are scheduled, tutorials are scheduled. So what our training coordinator will do, so the training coordinator will keep things in her calendar, and she will send out uh, an email to all students who are supposed to join the session, indicating that you have a new session happening tomorrow or day after tomorrow. So think this is at least it will take 15 minutes every time she does this work, because she has to find a list of students, put them into a mail. She has a structured mail, but it will take some time for her, and she has to switch out of other work and do this work. And if she forgets, then again it's a problem. And she used to do this about 40 times a month, because there are 40 different sessions running in a month. No, because there is ECBA, CCBA, CBAP, CBDA, something else, some tutorial, some webinar, so many things are happening in a month. So she will do this activity 40 times in a month. And even if you take just a bare minimum cost of, say, $15 per hour, which is a very low cost resource, even then, if you take per hour, we have spent approximately, if you take 10 hours of time in a month, and each hour is costing us $15. So we have spent $150 in doing this simple activity of alerting our students. Now multiply this over a year. 1 year, you have spent $1,800 on this tiny activity, and useless activity as well. It's not, doesn't have great value. Then we went to our uh, development team and we said, okay, can you write an automatic emailer system for us, which will understand who are our students, and you send these alerts to these students? They said, yeah, but we will charge you, say, maybe about $3,600 for getting this done, because we have to spend our time, money. So this is the money that you need to spend on the project. So now if you see here, uh, in just 2 years' time, we have recovered our initial investment. Now, this system is running for last 8 years almost now. So every year we are saving $1,800 now. And even if you take, so now suppose you don't get $15 per hour, the costs have gone up, it has become $20 per hour. Even then, all our costs are protected, because the system is sending out all emails. So that activity is off our head. There's still many activities that we still have to do manually because the connections are not proper. But wherever we think there is a possibility of automating a process, we do try to make automation. And I'm very glad, although we are a very small team, a lot of our processes are actually automated. Very large number of processes are quite automated, which is a good thing. It is something that we have really invested ourselves into. So this is how you do kind of a simple financial analysis. In a complex one, of course, you will have many tables, many considerations and taxes, and so many things will come into picture when you do the complex one. Okay, so I think it's almost like another 10 minutes for me to talk a little bit about adaptive. So we help business analysts to grow faster in their career, mostly through IIBA certification trainings. We have a great success rate. We have success guarantee and so many things which some of you might have seen. Okay, and this is a survey that we ran for our past students. So about 50% said they got a better role. About 60% said they got better salary hike as well. In fact, just about 2 days back, I received a video feedback from one of our students. We are editing it to publish it. She said she got CBAP, and within months she got started getting calls from recruiters, and she landed in a new job with 40% salary hike. I said, "Wow, this is really nice." So there are so many students who have got good results out of it. Two things. One, you understand the subject, you apply the subject at work, you create a brand for yourself. It works in your favor. And this is what we kind of promise to our customers: good quality content, good quality faculty. And I may not, you may think I'm boasting off, but frankly, I do not think there is any other training institute in the world which has the same caliber of faculty that we have. It's a written promise. It's not something that I'm making up, because we have been really careful in choosing our faculty members. We get almost 20-25 requests a year to be enrolled as a faculty. At best, one person may get in, at best. That's how the stringency about our faculty members. They must have 20 years plus experience, must be a CBAP or a CBDA to teach the course. So that way we have been able to maintain a very good faculty pool, and obviously a good support team as well. So that's what has made it this possible, that I don't know any other training provider does not provide the data about how many students they make pass. But we keep a very close track on that, and I don't think anybody comes close to us. Maybe not even one third of what we do. Okay, and Matthew is one of our past students. He did ECBA, CCBA, and CBAP, all three in last 4 years. So he has been kind of keep clicking one more, and he is actually getting a significant benefit. And I'm expecting a new video review from him as well. And this is the offer that I wanted to share with you. We have a new course called Generative AI for business analysts. This is being launched in the month of February. Those of you who purchase either our masterclass or boot camps get free access to that course. So that's priced at $199. But those of you who buy another course like masterclass or boot camp, it comes bundled for you. Okay. That's it. This is why we exist. We help our BA students and to make good of their career. And I'm very glad that so many of them have migrated to different countries, have found better roles, better jobs, much higher salary component, which is a pride factor for us, for sure. And in fact, I was in BBC, the annual conference that IIBA conducts last year in April. There were about 600 um, people in the conference. Six of them were our students. I said, this is not bad. Like in a population of 600, you find six of your students, and all of them were very happy, and all of them are certified now, which is a good news. So it's always a matter of pride to see students doing so well in their work career. And we are also working on creating some new content around behavioral skills for BAs, but that might take some time. That has been in our radar for some time. Hopefully, 2025, we will see some traction on that product as well. Then how do you reach out to us? We have two simple email IDs. One is the customer success email ID, which is a broad email ID, and it is monitored 24 by 7, 5 days a week. So you can write to that email ID, or if you want to write to me directly, you can write to me at ln@adaptiveus.com. The toll-free number is also there. Okay, that's about it. I think there are a lot of comments on. There is also some large comment, which I will take some time to grasp, mostly from Sri Vignesh Ratnam. I will really kind of see what is the comment. I have to kind of digest in my mind as well. Okay. So that's about it for today. We are almost on the closer time. Is there any final question anybody would like to ask? Oh, there is a spelling error. Where is spelling error? Let me see. Maybe my own email ID I might have written. Ah, oh, sorry. Yeah. Thank you for catching it. It's .com. Not .com. Okay. Good. Thank you. Thank you all for joining us today. And I wish all of you a great 2025. Hopefully, things turn better around the world. The wars stop and the world economy goes back to a positive spin, maybe from next month onwards. Okay. Thank you. Bye bye.